Hey there, welcome to the show. It's the first full week into the second half of 2023. It's week 27. This week's show is all about second quarter recap. So before we jump into that, I got a couple of things I want to talk about here on the hot sheet. First of all, notice right up here in the upper left-hand corner, we've got our existing home sales are now officially higher than the new home sales count. We're 41% of our inventory is existing homes, and 38% is new homes, and that has changed. And that's kind of an interesting dynamic because new construction here, the last several months anyway, has outpaced in the inventory in the for sale category, but we're finally starting to see some of that inventory drop just a little bit in the new construction and also an increase in the existing homes there. So what that looks like here, there's the other side. This is what it looks like on the pie chart graphic as well. And this is the graphic that you see every week on the show. It's in the show notes and in the show graphics each week as well. But it's 41% to 38%. The number of homes in sale pending are still well above what we're seeing going under contract in the new construction. 62% is single family existing homes versus 21%, and then 68% of our closed sales year to date are the existing homes. So that's pretty much the normal, but over here on the left hand side, we've seen the new home count be higher most of the year. It's just finally switched back over. So, all right, with that, let's jump into 2023 quarter two in review here. This is the bar chart showing you the number of homes for sale at the end of the quarter. So as of June 30th, we had 2,809 homes on the market versus 2,257 a year ago, second quarter, and 1,864 a year prior to that. So we're building inventory year over year since 2021. Back in 2020, of course, this is the year when this is the quarter where COVID really started to hit. We started to see inventory drop dramatically. In fact, you can see all four quarters in 2020 where inventory dropped, where we normally see this first 2 or 3 months rise and then either level off like it did last year or drop off a little bit. So we're seeing some more normalcy. It's just taking a little while to get there. So at 2,809, that's our highest inventory count. Probably, well, in fact, I think I said that last week. We're at the highest inventory count that we've seen year to date, and it's fluctuating a little bit. But last week we saw that sale pending count at the end of the quarter. While we did see an increase second quarter, that's kind of to be expected because we do see this most of our sales for the year come in that second quarter. That's the most active period of time, followed by the third quarter. So we ended the quarter at 2,449 versus 3,091 a year ago, and then our close to our all-time high back in 2021. We were at 4,291. That was actually down just a little bit from our all-time high of 40. I think it was 4,600 if I remember right. But we are still desperately behind last year, and it's not due to a lack of home buyers. It's predominantly due to a lack of existing homes to sell. That's our main reason. I keep hearing, buyers will buy. They're out there to buy, but they're not finding what they want, and we've got the homeowners sitting on the fence still waiting for the opportune time. And that's going to be a topic here in the next couple of weeks, is going to be about what is going to be that tipping point, what's going to make things go back to encourage homeowners to be putting their homes on the market. And I'm doing some research right now to figure out what that is. So just to look at the sale pending count, just over quarter two year over year, you can see that we've seen 3 years. This is our third year where we've seen a decline in sales counts in the sale pending category. All that's not to be unexpected from 2021 when we had that massive year of homes in sale pending. But it would be nice to still be ahead of last year's numbers, and we're desperately behind that again. So just a different way to look at that same chart. Closed sales per quarter, this is an actual number of actual closed sales on the quarter, not at the end of the month or at the end of the quarter. This is the number of homes we actually closed. We closed 3,944 homes at the end of second quarter. That was our number of closed sales versus 4,645 which was pretty close to 2021's at 46.97. So again, that inventory, just not having the inventory out there is making our closed sale counts go down, which means our year-end closed sales are going to be below what we've done the last couple of years. Just no way it's going to pick back up unless something dramatic happens in the real estate market. Just to give you another view of, again, that same graphic, just looking at Q2 versus the previous 6 years or 7 years there, going all the way back to 2017, you can just see how far behind we are versus the end of, second quarter closed sales. We're having probably our slowest year, even prior to COVID, all the way back to even 2017. We were over 4,400 homes closed in the second quarter, and we're well behind that. So median days on market is starting to tick up just a little bit. The last 2 years at the second quarter, we were 3 days on market, and we're double that at 6 days on market. It doesn't seem like it's slow, because really 3 days, what's the big difference there? But it is a difference that we're seeing. At 6 days on market is taking just a little bit longer to sell homes. And the months of inventory, this one is increasing just because we're increasing our for sale inventory. And so we're seeing 2.1 months of inventory versus 1.5 months and 1.2 from 2021. If we go back to 2019, we even had a little bit more inventory back then. Everybody likes to compare everything back to 2019 prior to COVID, and we've done a show on that in the past. If you can look back in the history, you'll see the video I wrote or produced that basically says, what if COVID hadn't happened? That's a kind of a fun video to look at, and it just says, where would we be if COVID wouldn't have happened? I would encourage you to go back and watch that video. It's a pretty good one. The median list price, so that was counts. Let's look now at pricing. So this is the median list price at the end of the quarter, $373,650. It's by far the highest median list price we've had going back, well, for as long as I've basically been collecting information. Last year we saw all 4 quarters, we saw it start out a little higher and then dropped each quarter. This year we've seen second quarter increase over first quarter. So that just tells me that, the buyers that are out there, they're willing to spend some money, even with the higher interest rates. But a lot of that rise is probably coming from the fact that the only inventory they have to buy from is that new construction inventory. So how does this look if you overlay that was the list price. Let's overlay the median price at pending, or the pending price with the dotted line, and then the median sale price, which is the dashed line. And you can see that really those two kind of are about the same. The median price at pending and the median sale price are about the same at the end of the second quarter, which is right around that $300,000 price point. So we're seeing median sale price rise just slightly, median price at pending just up a little bit, even though our median list price is up around that $373,650. And then these are those same numbers at median sale price at quarter. So let's end the show this week just looking at mortgage interest rates. I think this has a lot to do with the inventory levels. I went back and I looked, because I was looking at this graphic, and right through here you can see we have been above 6% mortgage interest rates. This is the Fannie Mae 30-year fixed rate average that I pull every Thursday. And it was back on September 8th of 2022. That was the last time we were under 6% mortgage interest rates, 30-year fixed rate mortgage rates. And the little red indicators here show the rise from the Fed, where they raised the Fed rates. And the last Fed rate change we had was back in May. They did not do anything in June. There's talk that they're probably going to do it again, another quarter point up sometime in July. And you can kind of see, does that make any difference when they make that change? It relieved it a little bit in the month of March to April. The May, the interest rates have been kind of cooking up a little bit again. So, they're trying to tame inflation even a little bit, even though things are looking a little bit better. I think we still have at least one more, at least 0.25% Fed rate change, maybe one more even before the end of the year. Hopefully not too many more than that. But like I said, we've been above 6% for all of 2023. It took us all the way back to September 8th of 2022 when we were at 5.9%. And this is going to be kind of my basis for the analysis I'm looking at is, what is that tipping point for mortgage interest rates? What do rates have to get down to encourage or entice homeowners right now to jump into the housing market? So we'll do some more talking on that. I'm going to do some talking with some mortgage lenders and some industry experts and see if I can't figure that out just a little bit. So month over month, this is where we ended as of this past Thursday. We were at 6.81%. There's talk that rates could actually jump up to 7% again before this starts to drop back down. I know locally some of the mortgage interest rates out on the streets are at 7% already. Some of them are a little bit lower than that, but we're still in that upper sixes. If you were to look at from the end of June to the 1st of July, not much change there. But if you look at where we were last year, the month of June in 2022, there was this huge jump during the month. It went up almost to 6% and then back down to 5.3%. And that kind of spooked a lot of home buyers at that point. At least this year, we didn't see that major jump. It's just been kind of, I wouldn't call it flat, but it hasn't dropped very much either. So, and then this last graphic here, this is the purchasing power. This is that one that we always look at that interest rates that we're currently at as of the end of the month right now. A 30-year fixed rate mortgage rate, if you based it on a $1,200 a month principal and interest payment, not including taxes or insurance, 30 years, just amortizing out that mortgage interest rate at, based on a $1,200 a month principal and interest payment would let you spend about $183,800 on a mortgage. This does not include your down payment. So this is just this is your mortgage amount. And again, we've kind of we see that your purchase power kind of rise a little bit here once in a while when the rates tend to drop just a little bit. But for the most part, the most affordable time so far in 2023 has been back in January when the rates were down closer to the low sixes, but never underneath 6%. You can see right there that, at one point that we were almost probably about $198,000 buying power versus 183 right now. So, we'll see what happens with mortgage rates. That's kind of the quick show this week. Please hit that thumbs up button for me, share the video, be sure and tell your friends, that this is out there. This is all for you. I'm not in competition with you. It's all the graphics each week are at DesMoinesMarketValues.com, and you'll see all the graphics and the links to previous videos at that site as well. So please take advantage of that. And I'll see you all again next week. Be good and be safe out there.